Hi, we're just going to have a run through on the IG trading app. I'll just get started. So this is the account page. So bottom right hand corner, you've got manage accounts. So we're on the demo account right now. At the very top in the middle, you can see what looks like 2 arrows. You can access your different accounts there as well at any time. As you can see, it says demo there. So it looks very much the same as a real account where you've got add funds. If it was a real account, you'd also have withdraw funds. You've got payments, so you can set up cards, different alerts you've got, screeners, settings, various different things. But let's dive into markets. So this is where we can make a list of different things we want to trade. You've got a pre-made one of popular ones, different currencies, your FX, commodities, so there you see oil, gold, silver, Fed watch list. So let's make our own one. So I like to trade with indices, so let's put in some of the indices. So you see the 3 dots. If you click on that, just put add to watch list, add to my watch list. I'll just do that for FTSE, Germany, Wall Street, which is the Dow Jones. Let's do US Tech 100, which is the Nasdaq. So one of the reasons I particularly like IG is just because there are so many options. So you can delve into this in your own time, but with the search button, you know, even say the Dow Jones, you've got cash. Cash is the smallest spread. So if you look at the numbers, you've got 900, 906. So it's only got to move sort of 5 or 6 points before you're in profit. Futures, so this you can hold open until March. But as you can see, the spread is now 10 points for that one. So 10 points before you're in profit. But you won't be charged if you hold it right up until March. Whereas on the cash one, you get charged daily. Only a very small amount. But if you're looking to hold for a longer period, say more than a week, you're better off going for a futures contract. And then you've got options, which is something I'll delve into at another time. So let's open up the watch list we've just created. So we've got the FTSE 100, so the 100 biggest companies in the UK. As you can see, I've got this on a 3-hour chart at the moment. You just touch the screen, got the different time frames popping up at the bottom. So you can zoom right out to monthly. That's going right back to the year 2000 on the left-hand side of the screen. As you can see, some major dips along the way. So you'll have the dot-com bubble, housing crash 2008, COVID of 2020, and here we are, right up 2024 at 8132.9. And you can make these a daily one. So this is where you sort of see how it's performed for the last year. 4 hour, which is one of my favourite time frames. So this is how it's performed for the last couple of weeks. Hourly, last couple of days. You know, right to like 15 minutes, basically how it's performed today. So I'll skip back to 4 hours. As you can see along the bottom, different things like you can change how the chart looks. So I tend to keep mine on candlesticks. Got different indicators. As you can see on the bottom, I've got the RSI, but things like moving average, it's brought up all those additional lines on the chart. But there's lots and lots to try out. Drawings, you can now draw on top of the chart. If you say, think, right, that's where I believe there's a level. If it crosses that, I'm going to go in. So you can leave yourself basically notes for another day. You can get it to show you all sorts of things, but let's just keep it simple for now. So as you can see on the bottom, you've got the RSI. I use this indicator because it's quite a good sort of trailing indicator to show you what's happened. So as you can see, it has recently gone underneath the 30 at the bottom, indicating that the market has dropped significantly, but now appears to be bouncing back. So we'll just come out, clicking that blue triangle on the top left. So there we go. So let's say we're thinking, right, this is going to bounce back. I want to buy in now. There you go, you've got buy and sell at the bottom. So we're going to buy. And this is where, so being a demo account, we've got £30,000 to play with. So as you can see with the FTSE, we can go down to £0.5 a point. And you can go up and up and up and up and up and up as much as you want until you basically run out of funds. So at the bottom of the screen here, it says margin. So if I buy £10 a point, it's going to take £4,066 from my margin. We can put things like a stop in there. We can put a limit. So stop, let's say, if it goes below 8,000, we no longer want to be in this trade. So we'll put 131 points. As you can see, it's moving all the time. This is it. We've got a green light, so we're in a live market. And let's say if it gets to 8,200 points, we then want it to sell. There you go. It tells you exactly how much. And like I say, this is a live market. It's moving all the time. So we're going to place this trade. So boom, there we go. Confirmed. So we've got different options as well. So let's have a look at Wall Street. Again, very similar setup. This one again gives you £0.5 a point. This time, let's say we're going to sell. So we believe we're looking at this chart and we think, we think it's going to continue dropping. So we're going to put a sell order in. And let's say we want it to, if it crosses 43,000, which is about 85 points away, we want it to come out. But if it goes below 42,000, we want it to sell. As you can see, it's a huge change. And look, Dow Jones, this is a very, very big market. So look, only 1 point is going to cost us 2,000. Whereas with the FTSE, I got 10 points for 4,000. This is where you have to calculate how much risk, one, you can afford, and one, you're willing to take. If you're working with a small account, I would steer clear of things like the Dow Jones. But this is it. This is why you got your demo account, so you can try these things out. As you can see, it's bouncing around. You know, I've waited that small amount and now I can afford a slightly bigger. Oh, no, let's go the other way. There we go. Let's place that trade. Confirmed. So we're locked in. So let's have a look at where those trades are. So we've got orders, we've got positions, and then we've got anything that we've closed. So in order to make the video, I closed a very old trade that sat there for quite some time. So here we go. FTSE, deep in the red. Wall Street, also in the red. As you can see, the money is moving at all times. In the top right hand corner, you'll see your running profit and loss. So that's the total of the two trades that I've got running. You've got your margin, which is the amount of money that those two trades have taken from your account, which is sort of like holding. So as and when you close a trade, it will give you that margin back, but it will either take away or add the money above it. So as it's minus £49 now, if I close both those trades, I'll get 6212, take away the amount above. Ideally, you want to be in, in positive, so you're adding money. Looking on the left-hand side, you've got your total funds. So as you saw, I started with 30,000, but now I've got available 23,000. So what you've got to account for is your running profit and loss is actually going against what you've got available. So if you run deeper and deeper and deeper into the red, what you've got available also goes down. Conversely, if you're going into the green, if you're making money, the amount you've got available is actually going up. So you can actually use unrealized profits to your advantage. So let's click on one of these trades just to see how things work. So we've got the FTSE. As you saw, I put that stop loss in at 8,000, which you've got this bar along the bottom. And then I put a target price of 8,200, as you can see on that top bar. So I could turn off my phone, I could, delete the app, and it's either going to hit one of those two prices. It's either going to sell at a loss or it's going to sell at a profit. What you could do is say, if it gets to 81.75, I actually want it to put another order in, because then I'm going to be in profit. So I want to compound my gains. So you could put a similar stop in there, so it still stops at 8,200 or 8,000, sorry. And you could also get it to then sell at the same price as well. So this is an order. There you go, it's confirmed it. So now if we look back, you've got GTC. So as I say, if price action moves up to that line, it will then buy another 5 points. So then we're at £15 a point. You've got two target prices and effectively two stop losses. If things move and you think, actually, I wish I'd put another £1 a point in there. There you go. Simple as that. Buy, size, place trade. There we go. So now you can see We've got 11 now. You can, on the bottom here, change it to individual trades. So now you can see your 10 points and your single point. And as you can see, this one doesn't have a stop loss or a limit because I never put those on. If you want to kind of group them, I find it much easier if you just group your orders. Here we can go in, we can say, right, now we can make it more precise. So we want the stop loss at 8,000 and we want the target price at 8,200. Edit position. You can only do this while the market is live. So that green light to the left hand side, if that's red, you can't do those sorts of actions. Similarly, if you want to close a trade, you can only do it while the market is live. So let's say, it's all going drastically wrong. You've thought twice about what you're doing. You're going to take a loss. Not something that I'm saying that you should do, but here we go. We're going to close this trade. There we go, confirmed. You're out. You've taken a loss, £41.80 loss. It's been a terrible day. And there we go. You've got those two trades broken down there. They'd actually both moved up slightly, but not above where you started. So we're doing this at 11:30 at night. So markets move very slowly at night like this. You'd be better off if you want to trade, day trade, you'd be looking at the Asian markets right now. But certainly the European and US markets will be moving very slow right now. So this one, we've taken a sell position. So let's say we want an alert. So, we're still unsure if we want to take out another trade. So actually what we're going to do, we're going to put an alert at 42,500. Just to let us know when it gets there. Could put a message on there, check trades. That's it. Set alert. So now you don't have to do anything. As soon as that price level gets to 42,500, you're doing your shopping, and you get a little alert on there saying check your trades. Because you might think, actually, I'm going to put another half point in there, or, I'm not going to wait for my target price. I'm going to get out while I'm in profit. Or, because if you got to 42,500 on a sell position, you'd be well into profit. So you might move your stop loss up. So at any time, you can move your stop loss. And this is something I advocate. Once you're into profit, I move my stop loss, usually slightly into profit, just so you can't lose on the trade. And as well, if you put it at break even, so basically, so you would get 0 for that trade, if the market's being very frantic, it could actually jump over and you end up selling at a very slight loss. So to prevent that ever happening, I just put it maybe a couple of pounds in profit, because then even if it's going absolutely mad, you might sell at 0. So you always get that confirmation each time you do anything like that. So like I say, but different ways of sorting your trades out. I tend to have, profit and loss high to low. But let's have a look at some other markets. So I tend to go for indices. I also like VIX. VIX is one of my favourites. Again, you've got cash one, you've got futures, and you've got options again. So again, you can add these to your watch list. Or if you go into any of them, you've got this star up here. Click on the star, and again, now it's added to your watch list. So you've got different things within each of these. Oh, look, we're running in profit now. So you've got market info. Certainly if you're trading a futures contract, it will not just tell you, the different times that the market's open, but it'll also tell you the exact date and time of when the last trade can take place. So if your futures contract ends in March, it will tell you, say, March the 20th at 5 o'clock in the afternoon. Basically, if you don't buy or sell that position before that time, it will automatically sell your position. You can have an automatic rollover, which is in the settings, which basically means if you've totally forgotten about it or if you've left it, it will find the next futures contract, which will probably be June after March, and it will automatically rebuy you a position in that market. So, there's lots of different things. There's usually one which tells you what other people are doing as well. It can actually tell you, 62% of people also took up sell positions, in the last hour. So, there's lots of statistics. There's so many statistics in these things. So here we go. So if you have a look at the stop loss, you've got a minimum that you're allowed to put for your stop loss. So I can actually move this. So 42,906. So I can actually move it. So now I'm in profit. So as you can see, if I zoom right in, got that tiny little orange line underneath. So now if that candlestick moves up, so I'm £20 in profit now, but if it shoots back up, I now effectively can't lose. It's as simple as that. So we'll keep that running while I'm talking. So markets. So as I was trying to say, I particularly like IG because of the variety you've got. So you've got your indices, your FX, which is all your currencies. IG allows you to do cryptocurrency if you're a professional trader. But then you've got things like shares. So, these are your most common ones. But you can just look for anything. So there we go. We'll say like Microsoft. Again, you've got cash, which is basically you're trading that day or for a short period, or forward, which are your futures contracts. So as you can see, you've got March, June and September. And the spread is very different between all of them. So with cash, the spread is about 75 points, 73 points. But then look at March. March is 200 and something points. June is 300. September, again, like 300 odd points. So what it means is the market's got to move fairly significantly before you're actually in profit. So this is one of the reasons I like indices, is because you're only a couple of points away from profit. Whereas Microsoft, you're basically making an investment. If the market goes the wrong way, you're going to be deep in the red very, very quickly. If I open a trade on, say, this one, You know, let's have a look at the smallest amount I can buy in Microsoft. So half a point, £4,400 to do the smallest trade in Microsoft. And look how deep in the red I've gone straight away. You know, £162 in the red. So it's got to make up a lot of ground before I'm actually in profit. It doesn't mean that you shouldn't use this. Of course you should. It's just, I would personally use something like Trading 212 or a shares app where you're actually buying the physical share, because then, you know, the market can move up and down, but they're much less crazy swings compared to this, where I'm £162 in the red from the off, and if it goes the wrong way, it's just going to get deeper and deeper and deeper. There we go, we've got those closed trades. As you can see, the Wall Street one, you know, might move it a couple more points, like I say. So £3. So even if it absolutely shoots up, I will end up with, you know, even maybe £1 profit. But realistically, you'll probably end up with £3 profit. And yeah, I hope this has been of some help to you. Let me know in the comments.